Hey traders, Jason here from Leavitt Brothers. Hope you're well. So in this video, I'm going to talk about some recent stock trades we had. Before I start, just a few random comments. Okay, if you haven't been doing well, I'm guessing you're the type of person who's trying to figure out what's going to happen. Are we going to have a recession? Who knows? When's the war going to end? Who knows? Is inflation going to come back down, or is it going to stay high? We don't know. Is the housing market going to crack because prices are out of control? Who knows? My guess is that you're probably constantly fighting with yourself or others, constantly debating, constantly negotiating, trying to figure out what's going to happen. And you don't have to do any of that. You just got to follow the market. Like I ask myself all the time, what is the market doing? What is it trying to tell me? What messages is it trying to pass off? And just go with it. Okay, just go with it. If the market's moving up, go long. If it's moving down, go short. And stop arguing with it. Stop trying to figure out what's going on. Okay, it's so much easier. Like trading has very little to do with being able to predict what's going to happen. Instead, it's just see what is happening and just go with it and put a stop in place. Okay, your life will be so much easier if you can just turn your brain off and just go with it rather than trying to argue and debate and figure things out, which nobody really knows what's going to happen. All right, so what I'm going to do here is I'm going to go through a whole bunch of just really quickly. I'm just going to flip through some charts. Most of these trades go back about 6 weeks. The market topped about 6 weeks ago. It's been trending down. Lots of great shorts to be had. So I'm going to flip through them. First chart I'm going to show is the S&P. I'm going to show you what I was looking at 6 weeks ago, and then we'll go through some trades. Every single one of these was placed on the Leavitt Brothers trading list at some point in time over the last 6 weeks. All right, let's get into it. All right, so here is the 4-hour chart of the Qs. This is what I saw playing out at the end of March, beginning of April. So we have the Qs up top. It's the 4-hour chart. Down below we have the MACD, and below that we have the stochastic. So what I see here, very simple setup that I talk about in my masterclass. We have a negative divergence there. Okay. Then we have a cross, and then while the MACD is trending lower, you get a pop. Okay, so I consider the MACD to be the trend. So while the trend is down, you get a pop from the price. And what that does is it enables, what happens is the MACD comes up and kisses its signal line. At the same time, the stochastic bounces and then rolls over. That's part of what I call my kiss and cross trade. And then we've been trending down ever since, and this chart stops at the end of April, and you know that the market has continued from there. I just wanted to use only 2 months worth of data so that it wasn't all scrunched up. But that's what I saw at the top, at the end of March, beginning of April. Negative divergence, this cross down here. While we're in the trend down direction, we got one more pop within the downtrend, and we got a kiss here and a cross here, and it's been 6 weeks of down since then. All right, let's flip through some of our trades. And I'm going to go fairly quickly. I'm not going to talk through them. I'm just going to show you what we've been doing at Leavitt Brothers. So here's AI. You can see it broke down from a rising wedge pattern here, hit our first target at 18. Then when it settled in here, established a new support level at 16.5. And then and then we put a second target at 15, which you can see that it not only hit 15, but it went well below. Next up, APP broke down from a rising pattern here and then settled in here, broke to our target at 43 there. And then as you can see, it continued down there. It had earnings the next day here where it was up a bunch, and then earnings again. Not earnings again, but then the follow through the next day. But obviously you can see it hit our target, settled in here for however many days that is, and then broke down pretty good, and then you exit the position ahead of earnings. APPS trending down, lower highs, lower lows, big swings in both directions, just trading in a little rectangle pattern here, breaks support somewhere in the mid 30s. made between 30 and 31 and fell to our target at 25. Bloom Energy. So it broke down from a rising channel here, settled in here below the 21-day moving average, broke down hard, got to our target at 20, and then it settled in here. Looked like it was going to be another good short. Unfortunately, they had earnings, and even with the market trending down and a lot of stocks missing earnings, I don't feel comfortable holding. But as you can see, after earnings came out, the stock dropped and fell pretty hard after that. But I only consider that first move to be playable. BRZE, nothing fancy here, just a couple months range, broke a support level at 40 and quickly fell to our first target at 35 and then our second target at 30. Carnival Cruises, little rolling top here, boom, 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 broke support at 18, settled in here for several days, fell to our first target at 15.5, then fell to our second target at 13. Nothing fancy here, just listening to the charts, okay? Listening to the charts putting in lower highs, charts getting trapped underneath certain moving averages trending lower. Instead of arguing, debating, are they going, is COVID going to make them shut down? Are people going to start traveling this summer? Or, gas prices going to prevent people from traveling? Who knows? Who cares? Just follow the price action. The price action was leaning down. Charge point, we had two different trades on this one. So this one actually was a long. We went long the stock over here. It was acting really well. You can see it broke out. Volume here, huge, came back down, tested at 21, and then, this almost doesn't make sense. At a time when the market was kind of struggling, this stock was just up, but it broke support, settled in here. This is where we profiled it. We said, hey, show's over. This stock has fallen too much. If a stock was strong, it might come down here and bounce off the 21 and form a range here and then go up. But the fact that it sliced through the 8, came down through the 21, got trapped under the 21 here. So the trade was to go short. You can see our first target at 13 was hit, spent about a week there, and then it fell further to our second target at 11. Chewy, nothing fancy here, just a relatively big range, falls out of that. We profiled it over here, said this thing's a short, it's going to fall further, and it fell from 28 to 23. Triple D, lower highs, lower lows, trending down. You can see, tried to channel up here, broke support, found, a little flag pattern here, broke down. You can see how it gets, support from the 8 here, pushed away from the 8, pushed away by the 8, pushed away by the 8. Now the 8's coming into play there. So broke a support level, settled in here, fell to our first target, moved sideways, got pushed down by the 8 again, fell to our next target. DocuSign, nothing special here, just weak stock in a downtrend, forming support at 80, quickly fell to 70, which was our target. EVgo, kind of a mess up here, big candles, lots of overlapping stuff, lots of long tails, break support, settles in here, and then we played the second move from the high 9s down to 8.5. Not a big deal, but it shows you don't have to nail the first move. Oftentimes they break down. You're going to miss that because, let me get rid of these, up here, even though the stock's kind of a mess, the reality is that's a decent acting stock. It's trending up. We're going to miss this breakdown here, but just because we're just not really looking short. But after it breaks down, oftentimes it'll do this. It'll fall too much. It'll fall so much that it'll tell you that, okay, the uptrend is over. It'll settle in for 4, 5, 6 days, and then you could play that second leg down, which is often what we do. Fuel cell broke support over there at the end of March, came down here, settled in over $5, fell quickly to our target at 4.5. And then it fell to our target at 3.5. This is another weak stock trending down. It's probably going to go lower, but right now it's bouncing, so we'll let it go. But good short, good percentage move. Figs, this is another one of those that we played to the upside here because it was acting well. Jumped over here, you got big volume, settles in over here, and then steadily trends up. But obviously you can see it rolls over. Now, if this was strong, it would have come down here, maybe bounced off the 21 and held the gains. But at some point in time, it falls so much that you can only conclude that that show's over. The stock's not going to continue up. It's not that strong. And so it settles in here for 2 weeks, breaks support at 15 and goes down to 13. This big gap down that happened on Friday was not playable because that was earnings. I guess you could have tried it, but I still don't like holding into earnings. Fastly, pretty neutral, not neutral, weak overall, but neutral over the last 2 months. Broke support at 17. You can see it moved to our target at 14 and then moved to our target at 10. Fisker looked like it wanted to break out over here. We have some highs over here. Tried to break out right there. We have huge volume, but it fell right back into its range. Then it settled in here above $12, broke there. Settled in here above $10, broke down there, and eventually hit our target at $8 there. I'm going to go a little bit faster here because these charts are getting redundant, but that's okay. Market was down. Market was trending down. It was weak. Lots of stocks falling. I don't want to say you can close your eyes and just short anything and make money, but that's what it's been like. That's what it's been like. If these patterns are boring to you, that's good because trading is boring. Trading shouldn't get you overly excited. It should not get your blood pumping. Should be pretty boring. Stocks breaking down, consolidating, then legging down again, hitting targets, acting weak, and then because they're acting weak, we establish another target to look for. So in this case, Farfetch broke down. Broke a support level there, settled in over here above about 13.5, broke down, hit our first target at 11, then hit our next target at 8. Fiverr trending down, lower highs, lower lows, kind of messy trading, but kind of tightened up here in a rectangle pattern, fell to 42, then fell to 34. NVTS, weak stock trending down, lower highs, lower lows. Showed a little bit of potential right here, but I've seen this a lot lately, is that we had some pretty decent bounces the second half of March. The S&P went from 4,200 up to 4,600. A lot of stocks rallied up. Volume was pretty good. They got above key moving averages, but as soon as they fail, they're shorts, okay? Up here, they look like, hey, maybe this thing could break out and resolve up, but as soon as it breaks down, it immediately becomes a short for a move down. This thing went from 9 there to 6 there. That's a huge move. PAGS, another one of the stocks that rallied big, as you can see, second half of March, but it topped here. One, double top, breaks down. I'm sure if you throw an MACD and stochastic on it, you'll get the same exact sequence that played out with the QQQ chart that I showed you near the beginning. Settled in, support over here at 14, broke down, fell to 12, then fell to 10. Plug Power broke a support level 26, fell quickly to 22. Roblox, support level near 30, quickly fell to 25. Raw Stores, even a Raw Stores, which is kind of a safe haven, broke support at 99, quickly fell to our first target at 92. Never quite made it to our second target at 85. C Limited, this stock went from 60 to like almost 400, and now here we are back at 60. It's just amazing how every story you heard about the stock is how amazing they were, what they're doing out in Asia. Everything was just amazing, and now the stock has done a complete round trip and given everything back. Broke support at 80, fell to 70, then 60. Snap. This was, I forget, somebody missed earnings and Snap was down in sympathy, but then Snap itself had earnings and the stock snapped back. But the earnings didn't matter. Eventually the stock gave it all back, formed this big pattern here, rising pattern, and then broke support near 28 and fell quickly to our target at 22.5. Snow, I always hear great things about Snow, how they're just doing fantastic. Who knows? Maybe when the market bottoms, and whenever that is, we don't know. We're not going to guess. Maybe it'll be a leader, but for now, the stock's been weak. It's been trending down. No reason to look for longs other than just on a very short-term basis. Stock broke support at 200, went down to 160 pretty quickly. Spotify broke a support level near 150, settled in over here near above 135, and then quickly dropped to 120. Square, I'm still going to call it Square. I don't care if they change the name to Block. You can see what happened. Same stuff. It was doing moderately well end of March, broke down, settled in for a couple weeks, and then quickly fell to our target at 100. Sumo broke support near, mid-11s, fell to our target at 10. Toast Broke a support level at 18, fell to 16, then 12. Again, these are all stocks that we put on the trading list at Leavitt Brothers. Upwork broke support level, fell to 20. VF Corp broke support level near 55, dropped to our target at near 50, and then dropped to our second target near 46. All right, so every single one of these was on the Leavitt Brothers trading list over the last 4 to 6 weeks. Don't ask me what's going to happen in the market. I don't know. I'm not going to pretend to know. I'm not going to try and guess. I'll leave that to other people. My job is just what is the market doing? What is it trying to tell me? And I'm just going to go in the direction of that. I'm not going to try and figure things out. I'll leave that to the academics. I'll leave that to the talking heads on TV. Our goal, we're just traders. We want to buy at a level and sell at a higher level. We want to short at a level and buy it back at a lower level. We don't get paid to make guesses or predictions. We get paid to actually be in the market and actually just to trade properly. Okay, listen to what the market's telling you and just go with it. Stop fighting with it. Stop fighting with people on Twitter. Stop arguing with it. Stop having conversations with yourself about like what's going to happen. I think this, I think that. It doesn't matter what you think. Just go with the flow of the market. All right. So good luck. Come check us out at Leavitt Brothers, where we, all new trials, all new subscriptions come with a 2-week free trial. So come check us out. It doesn't cost you anything. Why not give us a shot? Maybe we can help you make some money. All right, we'll see you next time.